Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's look at some of the stocks now. A busy Friday on the move today. Tom Keenan, Paul Sweeney, and with us, he's now Lisa Mateo, John Tucker.
And it's Merger Friday. Deal news. Charter Communications combining with Cox Communications. This is a all cash and stock deal that would unite two of the biggest U.S. cable providers. And the big question was, is this two dinosaurs mating? And apparently not. The takeover values Cox at $34.5 billion, including debt. This confirms an earlier Bloomberg News report, by the way. I should point that out. It includes $12.6 billion in new debt and $29.9 billion in equity. The combined company actually will be the top broadband operator in the U.S. and also increase Charter's subscriber base by something like 20%.
So what's the why here, Paul? Are they doing this for the internet? Are they doing it for Wi-Fi? Are they doing it for traditional cable?
I think it's simply scale. This is a fixed income business. You lay the wire fixed in the ground, and you're just getting leverage over your fixed cost. And the growth story is not as great as it used to be. So can they get some cost synergies? Might be one of the questions. So the overlap. I was just interacting with Jennifer Rhee from Bloomberg Intelligence. Is there going to be a regulatory concern? And she says maybe they're going to look at the regional overlap, I guess.
And in terms of the competition with AT&T and like T-Mobile, where does that all stand?
Yeah, I mean, these are all national competitors, so it's a very competitive business.
All right,
next
we have more deal news. This is Vistra buying the 7 natural gas-fired power plants. The price tag here, $1.9 billion. This is the latest big U.S. generator betting on the fossil fuel to feed the voracious appetite of artificial intelligence. It actually follows NRG's announcement that it agreed to pay $12 billion, including debt for a fleet of gas-fired plants from Ellis Power Equity Advisors. Now, in January, Constellation Energy said it would spend $16.4 billion for closely held Calpine, another large U.S. operator of gas-fired plants. Vistra did rise in regular trading after the regular markets. So again, more companies depending on fossil fuels for these data centers.
Vistra, which sounds like a pharmaceutical company, it's the old Texas Competitive Electric Holdings Company.
All right.
Which came out of bankruptcy. I'm learning every day.
Well, John and I know that Texas has its own grid, right?
Well, it's an independent state. They like to be independent of everything.
That's Vistra. Texas. Okay.
All right, let's move on to the biggest American maker of chip manufacturing equipment. I'm talking about Applied Materials here. They're delivering a lackluster forecast. And they also highlight the potential cost of the trade dispute with China. According to the company, the sales is going to be about $7.2 billion in the third quarter, plus or minus $500 million. This is roughly in line with Wall Street estimates, though some analysts projected as much as $7.4 billion. The profit is going to work out to about $2.35 a share. The chip industry companies adjusting to restrictions on sales to China, and of course that's one of the biggest markets for their products.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.